The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 15th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. And of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with a rally. You got the Dow up 377, S&P up 43, NASDAQ 100, 272, Russell 303, 219 for the trannies, semis up 263. That's a 3.5% move there. So that is a big move. NASDAQ Composite 206, New York Stock Exchange up 128. Gold is off $16. Silver's down $1. Light sweet crude. Let me change this. Roll this over into the second here. Roll this to the March contract. Give me a moment here. 6. We got light sweet crude. That's trading down $2.62. That's a 4% move. Natural gas is down 3 pennies at 3.08. So let's begin. Where do we want to begin? Let's begin by, let's look at a couple different things out here. I've got my black background charts. So I'm going to do what I did yesterday, try to keep them both going and see how that flows. We take a look at just a very short-term indicator. It would be the Apogee pivot points. So here Apogee came in at sometime right around the January 13th. I think it was around 350 or so, 347, something like that in the afternoon. And so we could take a look at this. Basically, when you trade above the Apogee pivot point or Perigee pivot point, it's at least short-term bullish out there. You'd be looking for, in this case here, I've got 30-minute charts. We'd be looking for 30-minute topping signals out there. We are trading above the Apogee pivot point for the ESCNQ and the Dow. So all those are set to go. So they're set to rocket to the upside. Now we're going to take a look at where the upside issues are out there. Gold, simply, you can see its retracements, its pullback. It's been testing that Apogee pivot point at the 45.94 level. That is held. Silver is really held. Has not been able to bust through that pivot point at 86.42 out there. So certainly something for you to take a look at and to consider. What do I want to take a look at next? Let's take a look at New York Stock Exchange, the advanced client oscillator. Now, the top portion is New York Stock Exchange. The second portion here is the advanced decline line. You can see we're at a new all-time high. There is substantial, significant, gargantuan market breadth out there. And that's why these rallies are being bought out here, just substantial gobs of market breadth. Now, the advanced decline oscillator measures the difference between the 39 and 19 period exponential moving average of that advanced decline line. So panel number 3 is really taking that information from panel number 2. Now, that oscillator, when it gets to the plus 150 level, we're 141 right now. The question is, are we going to get a 150 failure? Or are we going to close above 150? Why is that important? Because if you close above the plus 150 level, it tells us about higher prices down the road. Doesn't mean it's going to be tomorrow or the next day, can be, but tells us about higher prices. You can go back and you can take a look at all those plus 150 levels and you'll see it always has led to higher price. When you get the 150 failure, I mean, we get right up to that 150 level, close really right about at it, 149 or so, and then we start to turn down. Well, then that has a total different connotation. I don't know which it will be. What I can share with you is you got gobs of market breadth. We have the spot VIX index, which is trading back below its 50-day exponential moving average. The 50 days at 1627. So that's bullish for the market. The New York Stock Exchange Advanced Decline Oscillator, that's bullish for the market. The Apogee Pivot Point, that's bullish for the market. You kind of get in the picture. A lot of things are bullish for these markets out here. Now, let's go see what's going on under the covers. Under the covers, let's do some intraday charts out here. So let's see what we've got up on our screen first. I think it's the ES Mini. It most certainly is. So the ES Mini had a TD9 count top, my recollection, for its 30-minute time frame. We're going to go see if that has failed. The 60-minute was going to complete its TD9 count top by, so it's already completed. So it has not. So the important level now for the day for the ES Mini, both the ES on its 60-minute and its 30-minute time frame have TD9 count tops. We're going to look at the hourly chart, which has got 7012. 7012 is the key level of resistance. If price closes above that, you're going to see a further rally. Now, further rally to where? So I've got two different profile levels on the daily time frame charts. One on the black background systems, one on the white. I trust them both. I trust the white system these days more so than the black background. But 7009 is the top of its daily profile. So we've got profile resistance at 7009. We've got it at 7012 out there. So a close of 7012 out there is going to be very bullish. So we're near an area where price, quite frankly, should pull back. Now, the TD9 count top for the 30-minute time frame, that did pull back and test support, both its oscillator and change line, as well as the buy zone of that 30-minute profile, which was between 69.92 and 69.94. So that's a strong level of support. I would say the strongest area of support for the 30-minute time frame chart would be its breakout area, and that is at the 69.8675 level out there. So TD9 count tops for the ES Mini. Don't know which way it's going to go when I take a look at the other intraday charts out there. I mean, the larger time frames like the 5-hour, the 4-hour, the 2-hour, they're saying that price wants to move higher. But here's the deal. Resistance is resistance. So 7009 and 7012, we are in a resistance zone. Now, on that 10-minute chart, I'm not seeing anything of significance here. There was a Rhodes momentum indicator top. Price just gets back, test, rejects its buy zone at the 69.96 level. So that's what's going on with the ES Mini. It'll take a moment for these NQ charts here to populate, but that's okay. We'll let these populate, see what kind of signals we have there. Then where do we want to move into? I don't know, but I'll figure it out. So we take a look at the NQ. The NQ on a daily time frame, you can see a couple of different things. One, you can see that yesterday price pulled back, tested, rejected the top of its profile. That's a so the problem with the NQ is it still has tops, right? Here's the Rhodes momentum indicator TD9 count top from back in October. Here's the other one that formed back on December the 5th out there. So those levels still have to be taken out in order for the NQ to get its mojo. If we take a look at what it's doing at this moment in time, price is trading above both the top of its profile, 25,629, as well as its green oscillator and change line. So the number here that's most important during the day is going to be that daily OUL, right around 25,819. You know, as price goes up and down, so does that number. But right now, peg it in at about the 25,819 level. As long as we remain above that, the NQ should continue to move higher. But it also has a TD9 count for its 60-minute and 30-minute time frame. We come back to this break, I'll give you those parameters, and then we'll start taking a look at some requests out there or anything else that I think is really pertinent for you today. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're still looking at the NQs, the TD9 counts for the 16 to 30-minute time frame chart. 25,952.75 is that number. If price is able to close above that, we're likely to see that rally extend. The daily time frame likely to go after its TD9 count top out there. Now, the top row of charts does not have any resistance, with the exception being the 2-hour. Price is taking on that TD9 count breakdown level at 25,925.75. That is not the most important number. The more important number is the 25,952.75 level. Price close above that, expect the rally to continue. Now, those TD9 count tops that had formed on the 30 and 60-minute time frame chart, well, they were forming those tops. The 10-minute was forming a Rhodes Momentum Indicator top. And price already pulled back and tested its breakout level, 25,817.25. So the message here is that price is going to go after those TD9 count tops on that 30-minute and 60-minute time frame. Whether it takes them out or not, that I don't know. But price should go after those levels out there. So let's do this next out here. Okay, so let me get to some of the requests that have come in. So let's get those out of the way, and then I'll start going and take a look. I want to take a look at silver specifically and try to break that down with you. So go into that in detail. So let's first start with IMRX. This is for Dan inside the Tiger's Den. So Dan, when I look at the daily time frame chart for this, I don't see any kind of a bottoming pattern or anything along those lines. There's no A to B equals C D or anything we can draw in here. But we do have those. We have price. What we can see the last couple of days we've had what looks like is going to be a 3-day or 2-day rally out here. Maybe a 3-day rally, with price trading with inside its bullish structured profile. So a bullish structured profile has got support at okay. It's a very bullish structured profile. The center and the bottom are both at 448. So, Dan, what should unfold here, the daily time frame is suggesting that IMRX should make its way up to 525 to 537. The weekly time frame, on the other hand, does have an A to B equals CD pattern to the downside that we can draw in here. So let's go ahead and do that. Let's draw on the A to B level. And actually, let's just copy and paste this one and move that over to the C point. So that also would say to me, Dan, because I've drawn in the weekly A to B equals CD But this pattern obviously exists on the daily time frame as well. That price objective is 352. So even if we were to get a weekly hammer, the candle it is showing right now, and I'm not saying that's what it's going to form, it still is not a confirmed by the D point pattern. What we do have is we have price trading below its oscillator and change line, as well as its profile. It took out that B point. Let's see if it was with volume. There was 5.4 million shares on the B point, taken out with 33 million shares. So IMRX has got an A to B equals CD pattern to the downside that is likely to continue. So you may just be having a daily counter trend move out there. Today being day number 2, definitely to the upside. It says caution. Most counter trend rallies are usually two bars out there, but it can be 2 to 4 bar moves. The monthly time frame is currently trading below the bottom of its profile just by a smidgen. The bottom of the profile is at 469. We're at 465 right now. It matters not where we're trading now. It matters where we're trading at the end of the month. But right now it's telling you pressures to the downside. So I'd say at this stage here, without any kind of bottoming signals, it looks to me like just a counter trend move out there. But 448 is going to be your key level of support, knowing that you have both the center and bottom at that level. So I hope that helps you out. And as always, thanks so much for your request. Fletch would like to take a look at Amazon. So because I do have a number of things running out here, we've got, that's not too bad. But it's going to take just a tad of time to get these charts populated. But so far, I can see on the daily time frame that Amazon Fletch is just trading with inside its daily profile. Tested the bottom, really closed just slightly below that yesterday, which is at 230.682. You can see that this morning's rally, that was after a three bar move to the downside. And right now, prices rallied right up into resistance, 239.84, or the first level of resistance. If Amazon can close above that level, Fletch, the oscillator and change line, you should see a move to 244 or 248. That is supported by the weekly time frame, which still remains above the top of its oscillator and change line and profile resistance. So no reason for Amazon not to be able to take out that daily oscillator and change line. Let's see if it does. It's also being supported by the monthly chart, which is trading above its oscillator and change line, but below profile resistance at 242.52. So a key number to be keeping an eye on, that 242.52 level out there, as well as the 239.80-ish type area. So that's what's going on with regard to Amazon. Let's take a look at Nike out here. NKE is the ticker symbol. Let's go see what it's got in store for us. Give us a moment here. Man, is it going to get cold down here tonight. 40s in Florida, South Florida. It's freezing cold. That's like that's like zero. It's at least like zero for Stevie. So, but going to a good concert tonight. So looking forward to that. Just not looking forward to the cold weather out there. It's Al Di Meola who's playing tonight. So I'm really interested in the guys that he's bringing with him to play. So it should be a great concert. Anyways, when we take a look at Nike here, Dan, Nike is trading about profile resistance, its oscillator and change line, which looks to me like that's where it's pulling back to. This may be just a 2-bar retracement out here. Dan, but 64.20 is going to be a key level of support. If price were to close below that red oscillator and change line, what it would do, it would increase the odds of a move back to profile support at 61.53. That's what the daily time frame has in store for us. The weekly time frame chart for Nike, as we know, we've got large confirmed A to B equals CD patterns, at least on the monthly time frame. What did the weekly do here? The weekly had a swing point from back in November 7th, that had a volume of 88 million shares. It was passed with 189 million shares. Man. So that is another big A to B equals CD pattern to the downside, Dan, on a weekly time frame. Wow. And the monthly is not even done. It's my recollection the monthly has more to go to the downside. I don't have that yet. It has way more to go to the downside. So Nike's not looking good. If you look at the monthly time frame chart, we haven't closed above the top of a monthly profile since April of 2023 out there. So longer term picture, those of you that might be in Nike, you really need to see a close of 82.44. We're trading at 64 right now, but that's what you're going to need to see to tell you that the trend in essence is changed. You're short now, Dan. Well, good. So at first level to be watching is going to be that 64.20-ish area. That absolutely can be a level of support out here. See, on the daily time frame, I can't draw in a topping pattern out there. That's why it may just be a 2-day retracement, with a further push higher out there. But overall, daily, weekly, or weekly, monthly, Nike does not look very good. Let's go take a look at the NOK for ELO inside the Tiger's Den. I don't know if that's Nokia or not, but let's go see what it pulls up here. So I got NOK trading out right now. It looks like at $6.74 or so. It is trading above the top of its daily profile and its green oscillator and change line. So those are bullish conditions and suggests that it wants to move higher. I don't see anything that's stopping that. So the daily says it wants to move higher. The weekly says the same thing. Now, the weekly formed a TD9 count top back in October 31st out there. And price did what it was supposed to do. Pulled back to where? The oscillator and change line, which is green. Green oscillator and change line tells us the price oscillator is above zero. Those are bullish conditions. A red oscillator and change line is below zero. Bearish conditions, but it matters where price is trading in relationship to that line. In this case here, what NOK is telling you is that there's a bottom in on that weekly time frame chart. It hit that oscillator and change line, has been rallying basically ever since out there, and we're likely to continue to move higher. Steve Rhodes with TFNN. We come back from this break. Let's start taking a look at silver. Actually, we'll first look at Eli Lilly. We'll look at silver, then we'll come back to Eli Lilly.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back up, folks. So we got the silver contract up on our screen out here. So on a daily basis, you can see yesterday was bar number 8. Today is going to complete bar number 9. And so you're going to get a confirmed daily TD9 count top today. That pattern is going to complete tomorrow. What that is suggesting to us, much like we just took a look at with one of those other instruments, I don't recall which one it was, as price you get a TD9 count top or some kind of top, and what does price do? It usually pulls back and tests that oscillator and change line. So that becomes the first target to the downside. That oscillator and change line is at $85. So it's going to seem like, the world just ended as price moves down there with a $5 or $6 move to the downside, wherever that might be. But that is the price target to the downside. Here's the other side of the trade out there. If you look at the weekly time frame chart, I find it hard to believe at this moment, but anything can happen, that we're going to close below its TD9 count top. That TD9 count top is out at the price point of $79.70. Did we close it with that? Oh, no, we did not. Okay. So we're at $91. Are we going to get a $20 move to the downside? Probably not. So the weekly chart for silver is going to negate its TD9 count topping pattern out there. That doesn't mean that the daily is not going to create a situation where price pulls back for 2 to 4 days, or maybe it turns into something else. I don't know. But if you look at the monthly time frame chart, we're only halfway through the month today, being the 15th. But it too is signaling to you and I that it may negate its TD9 count top, telling us about a strong upward momentum move. Look, what's going on here, silver, gold, hard assets, stock market, is people just simply don't trust government. It seems like it's just a blank hole going on across the globe out there. If you're a money manager and I just gave you $1 million and said, you've got to put it to work. You've got to put it to work. Where are you going to put it to work? Just think along those terms out there. In any event, you got the daily. So it's a weekly and the monthly are saying, yeah, I'm not buying into this. Okay, short-term pullback, yeah, no problem. So now let's open up the daily time frame contract out here, the March contract. See what we've got. You can see that all the retracements out here have been, and we go back fairly far, have not exceeded a 4-bar retracement. Right, it tells you about a super strong bullish market. That 4-bar retracement inside of silver took place back in July 28th, that is. So what would you be looking at to the downside out there? Well, you'd be looking for something more than 4 days to the downside to tell you about some kind of change of trend. But more importantly, what you'd be watching for here with the daily TD9 count top is likely just a 2-bar retracement. Likely just a 2-bar retracement. Now, why am I being so cautious? So let's take a look at the black background charts out here. Let's look at our horizontal and diagonal trading ranges. So this is a weekly time frame chart that we've got up on our screen. Those green horizontal lines are our horizontal trading ranges. And what we can see here is prices sitting at one right now at $91.47. Look, I don't use this right to the penny or what have you, but we are sitting at a level of resistance. The first diagonal rising price channel, you can see, started along the bottoms from 2020 out there to the 2022, 2023 bottoms, and then we just simply align that with the highs out there. And once we establish that first group, the first group being the bottom portion out there, then all I needed to do was just simply multiply it times 100% for each to get each other successive rising price channels out there. If we were looking at a descending market, it'd be just the opposite. So you can see we're up against a key area of resistance out there, a rising price channel, a horizontal trading range, and that says, okay, time to be careful out here. Just time to be careful. Be cautious, cautiously careful. Now, if we take a look at gold, here's the monthly chart for gold. And if we take a look at gold here, it is trading above its horizontal trading range at 44.72. Says it may want to go target 49.97, so $5,000 out there. But we can see that price is trading into a rising price channel. It's got resistance right around the 47.70-ish type area out there. So if price is able to get about 47.70, what this is telling us is price should make a run towards 5,000. But we're up near resistance as well. We're not right at it, not like silver is, but we're up near that resistance level. Okay, so that's something to take into consideration. What else do we want to take into consideration? Well, it's probably worthwhile to realize what the U.S. dollar index is doing. There are people out there, there are big people out there, big talking heads, initials like RD out there, telling you, telling me, telling the world that the dollar is getting ready to fall apart. Now, I don't know what the heck that guy is smoking out there, but he certainly isn't familiar with the trading pattern that has existed inside the U.S. dollar index since 2007. And that's where that first red down arrow begins out there. And the pattern that is associated with the U.S. dollar index, and this pattern is going to exist until it fails, is that every year that has had a down year, the following year was a move higher. Take a look at 2007, we moved higher the very next year. We moved lower in 2009, we moved higher in 2010. We moved lower in 2012, we moved higher in 2013. We moved lower in 2017, we moved higher in 2018. We moved lower in 2020, we moved higher in 2021. We moved lower in 2023, we moved higher in 2024. We moved lower in 2025. What are we going to do in 2026? We are likely going to head higher. In fact, the U.S. dollar index very likely has put in the bottom for the year out there. So that says, well, what else do we have to potentially take into consideration? And that, of course, would be that correlation. Now, I don't know which correlation I've got up here. I do have gold and the dollar. So if we take a look at gold, which is the top portion, this correlation chart, by the way, is taking the 5-day average. Bars that are below zero tell us about an inverse relationship, meaning the dollar moves higher, gold moves lower. When bars are above zero, it tells us about a directional relationship. You can see that for 2026 right now, that is what that yellow rectangular box is showing us, that we have a direct relationship. And there are plenty of times where we have the U.S. dollar index moving higher and metals moving higher as well. But look, predominantly speaking, as we go back and we take a look at this correlation, it is predominantly an inverse correlation. So something to consider. But what we do have going on for sure is we've got the weekly and the monthly that are going to likely negate their TD9 count tops for silver. And the daily at this stage here, it looks to me like it's really just a short-term top. We're just up at resistance. Is it a 2-bar? Is it a 4-bar retracement? That I don't know. Another key level of support to be watching to the downside would be $79. That is the top of its daily profile. But let's switch over, take a quick peek here at the intraday charts for silver. And as the intraday part pop up on our screen out here, what do we see? Well, we've got a 5-hour TD9 count and Rhodes Momentum Indicator top. What that tells us is that silver needs to close above that high in order to tell us it's ready to move upside, and that's at 93.70 out there. Now, if we take a look at the 4-hour time frame chart, we have the same set of patterns. The same thing on the 2-hour time frame chart. The same thing on the 60-minute time frame chart. The same thing on the 30-minute time frame chart. The same thing on really a 15-minute chart, but that's just a much more intraday type signal out there. So we do have some significant resistance in silver, and that means now what are you going to watch? So to the upside is pretty easy. You're going to watch the level of 93.70. To the downside, what's the area to watch? And that's a really good question out there. That's the best question. I'm going to have to go with at this moment in time, it's going to be that green oscillator and change on the daily time frame, $85 and change. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the charts here for Eli Lilly. On a daily time frame, Eli Lilly forms a Rhodes Momentum Indicator top. It does that on the trading day of January the 8th. And since then, we've been trading lower out here. We are now inside of its daily profile. And if it closes below 1031 out here, Mr. Bill, we're likely to see a move to the 1,350 level. That's really the TD9 count breakout and very near the buy zone. So the buy zone on Eli Lilly is between 986 and basically 1,004 out here. And it looks like that's where price is headed to. Now, it has a TD9 count bottom that formed back on December 12th. That had volume of 3 million shares. Today, we're already pushing lower with 2 million shares. So you're pushing lower with volume. It's likely going to at least test the top of that swing point. And that top is at 1,003. If it closes inside that, we're likely to test the low at 977.12 out there. The weekly time frame is just simply trading with inside the sell zone. So it's really held up pretty well out here. And that says if we were to close below 1013.55, then that would change the tone and the character and say an area of support that is held has now failed. And if we get below 1013, that could bring out the 816 level. We're not going there because we'd be paying attention to the daily time frame. You asked for an intraday chart. I really can't pull that up just now. Maybe during a breakout there, Mr. Bill, I could try to pull up those intraday charts. But right now, the daily time frame is telling us it wants lower price. And it's with volume. And if you look at the monthly time frame chart, there's a potential that this is going to form a Rhodes Momentum Indicator top at the end of the month. But it's too early to make that call. That's what's present at the moment. So I'll try to pull up those intraday type charts for you. But you got the task market profiles on this screen too. So you grab that for you. And let's move on to our next request, which was to take a look at Basil Holdings, ASML. This is for Duncan Steve inside the Tiger's Den. So let's take a look at this here. Basil Holdings is in the Crazy 8. It's playing that game, Crazy 8s out there. Why is that? Well, a sort of Crazy 8. Today's going to become bar number 7 of a TD9 count. Likely we'll see bar number 8 tomorrow. There's no reason to suggest otherwise. We're trading above its oscillator and change line at a daily time frame. We're trading above profile resistance. That is the same for the weekly and the monthly time frame out there. So I fully expect this to rally further. Well, on the weekly time frame, we are in bar number 8. On the monthly time frame, we're in bar number 8 as well. So there's the potential for some type of top to form, but maybe it doesn't form until next month out there, or maybe it doesn't form at least for the next couple of weeks. That's the weekly message. So the daily time frame, everything looks good here. No reason to be worried, at least at this moment in time, Dunk. So let's take a look at your next request, which was QBTS. Let's get that up on our screen out here and see what this is doing. QBTS is trading. It's trading with inside its daily profile, Steve-O. So it's got a buy zone between 25.78 and 26.49. Resistance, which it basically tested this morning, is at 31.45. So just a consolidation on the daily time frame. The weekly time frame had a Rhodes momentum indicator top and may have bottomed not because of a pattern, but just simply because price got back, tested, rejected support. The bottom of that profile, 21.37. The real issue here, Dunk, as you can see, is that weekly oscillator and change line. What you really need in order for QBTS to start moving to the upside is a close above that level. We're not far away from it. That level's at 30.12. We're currently printed at 29.71, but that's what you need to see. The monthly time frame is ready for that to unfold. It's in bullish mode. It's trading above its oscillator and change line and profile resistance. So no reason for it not to rally. It is really that weekly. That is your little booger out there. So if you can close above that oscillator and change line, you're off to the races. Now those races, unfortunately, on the daily time frame could have a quick pit stop. That pit stop being at 32.53. But you close above that, and then you really are off to the races. So that's what we see with regard to QBTS out there. Brent in Martinez, California wants to take a look at ticker symbol THRY. So let's go ahead and pull that up on our screen out here. Brent is not in a position at this moment in time, is looking at see what kind of bottoming signals there might be. He was looking at the fact that prices tested a prior swing point low, so let's take a look at that test along with him. He's referring to the swing point from back on the trading day of on November 21st. Now that swing point had volume of 872,000 shares. The low, 525. What did we get down to yesterday? We got down to 524 on 712,000 shares. So 712 was going against 872. That's a test and rejection on lighter volume. At a minimum, you should get a rally that takes you up to the sell zone for the daily time frame. That sell zone is between 574 and 593. That is very likely where price is headed to. If you can close above 593, then you get a profile change in trend, and that would signal we head up towards 690, the TD9 count breakdown resistance level. The weekly time frame chart does not have any kind of a bottom signal, and price is trading below profile support, which is at 598, and it's trading kind of right at its oscillator and change line. The oscillator and change line is 548. We're at 551 right now. The monthly time frame looks absolutely horrible. It does look absolutely horrible. We are trading below TD9 count support. We're trading below profile support. We're trading below a red oscillator and change line. Let's see what the A to B equals CD pattern has as a price projection out here. And there's a couple of them we could use. I'm going to use the more conservative one. And this is saying we get down to about 64 cents. We're at $5. Now, folks, do not short a stock that's $5 out there. But, Brent, the message is, at least at this stage of the game, is that price wants to head lower. Now, I would say in the daily time frame, because you've got that counter, you've got the Rhodes momentum indicator bottom. Anyways, yesterday, that's what it also formed out there, as well as testing that swing point. So I would say you've got a couple more days, 1 to 3 more days of a rally out there. Before price starts to turn lower. At least that's the call at this moment in time for THRY. Brent, thanks so much for writing in, and I appreciate the request. As I do from ELO, who wants to take a look at CTRA. CTRA, let's go see what this is doing, what this is trading out at. Review, it's popping. Okay, so we know that it's popping. So let's go see what it is doing. We got this trading out at 26.91 right now, and it's going to pop until it gets up to the 27.11 area. Now, what I don't know, ELO, is what's going to happen at 27.11. What I can tell you at 27.11 is your TD9 count breakdown resistance area. So it should be strong resistance. Now, that's a beautiful thing. Why? Because if price closes above it, strong resistance will have failed. But that doesn't mean that the move or the move up to the upside is free to roll, because you've got a TD9 count top. And that TD9 count top is from December 5th out there. So you're going to want to watch to see if price gets into that swing point anywhere between $27.35 and $28 even Steven. But it does look good. You're trading above profile support, the green oscillator and change on. The question is what happens at 27.11? And it's only the daily time frame chart, ELO, that is really going to be the problem child out here. If you look at the weekly chart is trading above its oscillator and change line, which is green, its profile. It's trading into a swing point that has volume of 34 million shares. We're doing it right now with 37 million shares. That says if you close above 26.39, you should get up to the high of 28 bucks even, Steven. So it's all going to be really about that 27.11 area. You take that out, and you're definitely headed to 28 out there. And the monthly time frame says, hey, maybe we get back to that TD9 count top up at our highs at the $36 level out there. So that's what we see when we take a look at CTRA. I think I've gotten through all of the requests inside the Tiger's Den. I will check the phone to see if there's any other requests. Oh, Hector wants to take a look at the IWM. So let me get those charts set up. We'll look at the IWM when we come back to this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Let's pull up the charts here for the IWM. This is for Hector and Patty. So, dang, I was hoping I was going to avoid that. Okay. Daily time frame chart, the IWM, the Russell 2000 is going to go ahead and form a TD9 count topping pattern today. It'll complete that pattern tomorrow. It should result in price pulling back to the 260 area. That is its daily oscillator and change line. The weekly time frame chart negated its Rhodes momentum indicator top last week. It's trading above all resistance. This very well could be just a very short-term move out there where price continuing to motor on higher. Now, the weekly time frame chart also has a wave 7 signal. That's letter G, but that needs a lower high to confirm that top out there. So just pay attention to that. On the monthly time frame, we are going to be in bar number 8 at the end of this month, but we've taken out a Rhodes momentum indicator top a couple of months ago. This has got a large A to B equals CD pattern to the upside. I know you wanted me to put in a consolidation measured move out there, and I don't know if I've got really the time to do that, but here's the longer term A to B equals CD pattern right now, Hector and Patty. And that's going to really give us what I think you're looking for. And that's got a price projection of basically 3,009. But if we were going to look at the consolidation pattern, and I could draw that in essence right now, at least the one that I visually see. And here's the rectangle. So it's really up at that Rhodes momentum indicator top. It's really down here. If we just simply move that box, when you break through a consolidation, you get a price objective that is equal to or greater than that measured move. So that would take us up towards a 320 type level. So you had a couple of different price targets out there. But right now, what's more important and most important is the TD9 count topping pattern that is going to take place inside the IWM. We're likely to get a short-term top out here, whether that is today or it begins tomorrow or Monday. So folks, stay tuned for all the great programming. Great to be with you on Terrific Thursday, and I will look forward to seeing you tomorrow at 11 a.m. So be safe out there, take care, and I'll look forward to seeing you again soon.